Hi, welcome to the Market Alert for Monday, the 27th of November 2023. So stocks surged for fourth straight week amid US macro meltdown. Bitcoin and gold were bid. Equity bulls giving thanks for dismal data. Bad is the new good. Not a surprise there really, but things have changed a bit overnight, but that can also switch back very quickly as well, back to the upside. So last week the market's moving higher following the Thanksgiving celebrations, as we showed in the statistical data that 83% of the time over the last 50 years the S&P has moved higher during the 3 days of the Thanksgiving, and that was true to form last week. So European bourses and futures are essentially unchanged, with price action and news flow limited post with the Thanksgiving celebrations there. Economic news for today: Lagarde's out and new home sales. There's nothing major this week in here. There's no CPI, there's no non-farm payrolls, but we have got central bankers out. There's quite a few of those. We've got Waller speaking, we've got Bailey speaking, and Lagarde's back out on Friday. So is Powell. So there's one or two, and then Lagarde's out again on Thursday. So it's central bankers week this week. They're certainly wheeling them out to try and keep everything afloat by the looks of things. Anyway, let's move on and have a look at the markets. We'll kick off with the implied volatility as well. So let's take a look at this first. And here you can see that we're down to 983. This is a multi-year low. And we saw what happened when we got down to 994. We saw the markets correct, and we've seen the bounce so far, but we are heading into the full-blown Santa rally as well. So it'll be interesting to see if the markets can actually hold. And so far they have. We've come back to more or less 89% of the range in this market. This is the Dow here. But we're down in these lows, which can be troublesome for the market. We can go lower. I think 7.45 is the lowest on record. I must check that, but or was it 6.45? But that was during different times than what we're currently in. So 9.83 is a good number for a potential correction coming into the markets. Okay, let's move on and have a look at the Dow in a bit more detail. So in the Dow, we travelled up to 35,400 on Friday. You can see this there, and overnight the market's already below the 5-bar moving average in the daily chart there. You can see we've had a good move in this market. In fact, let's just do a quick calculation, see how far we've moved up since the implied volatility topped out at 16%. And you'll see there we've moved up 3,076 points. So the market again due for a potential correction. 30-minute chart, we were up in the pre-market on Friday, and then with the Dow trading half day, we managed to finish off the high, but we have got a gap in the data overnight, and the market already heading down to that 35,300 level, with the low there as well, just underneath this. So an important area for the market to find support, given this is where it fell out of, moved higher from on Friday. So close below the low should see prices move lower, probably just down to the level that we see there for Thursday's electronic session. German DAX also showing the same thing, but not below the 5-bar moving average at the moment. 16,000 is not holding as I record. It's just coming back through at the moment. This red line is 16,000. We managed to get up above this and trade up to 16,047, but at the moment down towards the S1, and this is followed by the low where the market moved higher off during Friday. In the S&P 500, showing the weakness there, currently trading back down to 4540.5, and again you can see we're below the 5-bar moving average, and Friday is up to 89%. Thursday's high, and then the market's made its way down. We've got a gap here as well. It hasn't been filled, so it'll be interesting to see if the market can come back. Notice also we're below the low already of Friday and heading towards the S3. The S3 is a very important area, as this is where the market is likely to find a bit of support. If it doesn't and it fails to hold at this level, then you can expect the market to continue lower, which you would need to go into the weekly chart to see this, which will be the sort of lows of last week, but at the moment certainly moving lower. If this is correct, it does seem a big drop, that does, for the S&P. Let me just double check this. Yes, it's spot on. The market is moving lower, so watch the S3 in the S&P. FT100 still stuck in a sideways range. Nothing really to move this week apart from Bailey being wheeled out a couple of times. Thursday's 30-minute chart, you can see the 89% retracement. There's the high of Friday. There's the high of Thursday we just got through, and we're making our way down towards the S1 at the moment. So don't know what's going on overnight, but obviously something's wobbled the markets a bit, and maybe because of the 3-day straight up on fresh air, there's a reality coming back to the markets during today's trading session. So US dollar continues to move low, which is good news for metal investors such as myself, holding at the moment. Don't know how long for, but the dollar certainly making its way south. So let's have a look at the gold and silver market. And silver allowed to move up on Friday and also during the overnight as well. Let's just go from this high down to this low, and I think you'll find we're through the 89. So watch the $25 level, because that's where the market usually gets hammered and then sent back to the south side. So we'll have to see. I noticed here that we're just starting to cross again on the stochastics. Maybe the momentum is going to move higher and allow the market to continue. But Friday, you can see there, that's an unusual picture. It's an unusual sight in the silver market, and particularly overnight as well, going through Friday's high and now sitting at the R1. So it'll need to go through the R2 to make its way to the $25, which is still half the price, 50% cheaper than 1979, 2011. Gold also being allowed at the moment to trade above the 2000 psychological level, which is also good. As you can see there in the 30-minute, a big move on the overnight. Like I say, I don't know what's behind these moves at the moment, but we had a bit of profit taking when we went through the 2050. And in fact, let's just have a look at the monthly chart of gold, so we can see what we're up against here. Let's just drag this over to the left a bit, and there you can see. So that 78 level is going to be important, 2078 for gold, and then from the left, I think it's more or less the same, isn't it? Just slightly lower. So it's the last time is $4 higher, which takes us back to when? May 23, so earlier on this year. 30 minutes of gold we've looked at. Like I say, we've had a pullback and we're starting to move back to the upside. So let's have a quick look at the gold-silver ratio, see how this is being impacted overnight. So silver, obviously percentage-wise, is moving far better than gold, which you'd expect, given that it's only $25 an ounce, or 24 at the moment, moving back. So at the moment, the target of 90 that I was looking for, expecting them to crush the market, they're not doing it at the moment, which is most unusual, but I'm sure give them time, they will do exactly that, because as you can see before, when they've crushed the market, they've soon crashed the silver price. You can see what happens, the market moves back. This is when it's been good, like it is at the moment. You can see that happening for a third time. So if we go down towards 78, then that's likely to indicate the top of the current silver move. Okay, let's move along and have a look at the basic trades for Friday, and also again a bit more detail of the German DAX in the 2 minutes and also the daily chart. So during Friday's basic trading session, there were no signals for the morning session or the night, so I'm just going to whiz through this. You can see how quiet it was. The market was sideways, traded down to the DP, then tried to make its way up. That's a 25-point range. We've just gone up to 37.5 and then to around 50 points eventually. So let's just whiz through the mid-morning session and on to the afternoon. And again, you'll see there's no real shakes in the market. There's no volatility. That's reflected, of course, in the implied volatility that we've looked at. Half-day trading for the US market sideways and still moving to the upside. But like I say, it was a horrible, choppy session. But again, the 3 days market moving towards the highs there. And a quick look at the overnight markets. 2-minute chart, you can see at the moment we're down at the S1. The averages are all in the right order for a short at the moment, and we're below the DP, which of course is a barometer of whether the market's long or short. So it's currently short. That doesn't mean say it's going to stay short. Watch the low, because it'll have a nice bounce off there and attempt to move back to the upside. In the daily chart, again, we've got that 1645 market down overnight there. Okay, that will do it for this one. If there is anything major that happens, I will let you know. But otherwise, let's see what the day brings, the week brings, as we revert back to normal trading hours and everybody back at their desks. So with that, as ever, thanks for watching. See you in the next one.